All right, so in this lecture, we are going to discuss the substantive procedures, and obviously you have seen many videos on the web portal regarding this topic. You have seen the practice sessions as well. And every lecture on this topic explains the same thing, the same techniques we talk about, that the AEIOU, that means the analytical procedures, that means the comparisons, and the ratios, the inquiries or discussion from the relevant person, inspection of the documents and the physical inspection, and then observation. Sometimes, not most of the times, you can relate the procedure to it. So if you are not able to relate it, just leave it. And then we have the recalculation. So many times we have discussed this. Recalculation is the most common procedure. Recomputation, inquiries, and this inspection and recalculation. These three are the most common procedures. So inquire, for example, with the relevant person, most of the times it is going to be the finance director, because obviously we are talking to the person who is dealing with the accounts, who is responsible for the financial statement, and that person is the financial controller or the finance director. And then the inspection, because most of the times you know the documents which are they. For example, if you talk about the revaluation, so it's the independent values report that you are going to inspect. If it's about, for example, the litigation, then it's actually the litigation received from, for example, if it is received from any supplier or customer. And similarly, the correspondence with the lawyers and with the customers and with the suppliers. And then the recalculation, for example, it's about depreciation, then recalculate the depreciation. If it's about the provision, then recalculate the provision. So it's the U procedure, which is recalculation. So these three, which is inquiries, inspection, inquiries of the relevant person, inspection of the relevant documents, and then we have the recalculation. So these few things are the most common procedures that you can use. Everywhere you see this. Now, other than that, I'm telling you the technique how to gain easy marks in the exam. Other than that, obviously you need to know the source documents. Source documents mean the documents which gives you the initial evidence, or the documents which are involved initially in the transaction. Initial documents, source documents. For example, if you're talking about the loans, it's a loan agreement, right? If you're talking about any purchase, it's a purchase agreement. So if you're talking about the lease, it's a lease agreement. Got it? So it's a source document, it's the initial document. And then we talk about the accounting treatments. Accounting treatments means treatments within the financial statement. So the checking the figure in the statement of the financial position, in the statement of the profit or loss. And one of the easiest mark is the disclosures. Every time you see this, whether the management has provided the adequate disclosures according to the relevant standard, whatever it is. So the statement of financial position, the statement of the profit or loss, and then we have the disclosures. So this is the first thing, checking the source document. This is the second thing, checking the accounting treatment. So one procedure from the source document, this is quite easy to find. And then the accounting treatment, there are three separate procedures basically. So once you talk about the statement of financial position, it's one procedure. And then you talk about the statement of the profit or loss, it's the second procedure. Then you talk about the disclosure, it's the third procedure. So 1, 2, and then the corroborative or other records. Now, other records includes that other than source document and accounting treatment. If you have something, for example, you talk about the registers, if you talk about the board minutes, if you talk about, for example, the bank statements. Okay, so these are the other records. For example, one of the most common thing is the board minutes, for example. If you're looking at some transaction, for example, even the litigation. So the board minutes give you the evidence, okay, what was discussed within the board regarding this litigation. For example, if it is about the share issuance, So what was being discussed within the board minutes regarding the share issuance, at what price the company is going to share the issue, whether it's a full market price issue, whether it's the right issue or the bonus issue, and how many shares are going to be issued. So the board minutes give you the evidence regarding that. And then we have the other things. For example, we have the bank statement. Now, bank statement is not the document of the company, it's the document of the bank. But for example, if they have taken the loan, so you can see a figure within the loan agreement. But how you can verify that they have received the same amount, then you will see in the bank statement. For example, they say they have purchased some assets, so you can see a figure within the purchase agreement. But how you can confirm that whether the same amount has been transferred to purchase the asset, because there may be under or over invoicing over there. So you see the bank statement. Okay, this for how many, how much payment is being made in respect of this asset. Similarly, if they have some cases which are being settled, okay, they have certain amount being recorded when they're within their books as a liability, and when they settle the case, what amount they have paid for the damages. So the bank statement gives you the evidence of the payment. So basically, when we are talking about the bank statement, we actually see whether the amount which was mentioned in the source document is exactly the same as the amount being actually transferred. So you can see that amount in the bank statement. So using the AEIOU thing, and I told you one of the three most are very common procedures within the exam, which includes the inquiries, the relevant person, you are going to make some discussion from them, and then the inspection of the documents, and then we have the recalculation, the recomputation. Then you should talk about the source document, documents which gives you the initial evidence, the documents which initiates the transaction. And then the accounting treatment, the checking within the financial statements. And then we have the other records, which includes board minutes and bank statements, etc. So obviously that is relevant to the situation. I cannot provide you a list, okay, that these are the other records that you must verify, because board minutes apply in most of the situation. Bank statement where the payments are being involved. And then other than that, there may be anything. For example, if it is about, let's assume, the purchase of the property, plant, and equipment, then the other records may be the title deeds. You are looking to see whether the title and the ownership is with this company. So this is the case. Now, let's talk about the provisions, and we are going to see one or two examples in this lecture, again, to just have a grip on it. Otherwise, I've explained each and everything in my explanatory lectures of the substantive procedures. I've given you the practice sessions as well, and I've given you the exam focused videos in this topic as well, again discussing few things. So let's talk about the provisions. Now we know that provision is an accounting estimate. Just revise your accounting knowledge regarding provision. We know that provision is an accounting estimate. We know that provision is an expense as well as a liability. We record this thing as an expense in the statement of the profit or loss. And we know this is a liability being recorded within the statement of the financial position. We know the provision is recorded when the outflow is probable. And if the outflow is possible, we go for the contingent liability, which is being disclosed. And we know the provision can only be recorded when you can reasonably estimate the provision. A reliable estimate can be made of the amounts which are going to be recorded within the financial statements. So these are the few things regarding the provisions which you know already. Okay. So let's start the procedures. Obtain a breakdown of items to be provided for and cost it to confirm the arithmetical accuracy and agree the figure to the financial statements. So basically, whatever is the provision, for example, if it is for warranty, then obviously there is a breakdown the management is having. For example, if they have given the warranty on the product, So there may be a few things which will be coming on for the repairs. There will be few things which will be replaced. So there's a breakdown, that's mean details. So you take the details of the items which the management has included within their provision, and then we cost it, we total it to confirm the arithmetical accuracy, and then we compare the figure which they have recorded within the financial statement. So basically, what I'm doing right now is taking their document which they have used to record the provision, and I'm just looking at those items, and then we are going to total it, and then we are going to compare it with the figure they have recorded within the financial statements. So this is just their record to their record. We are not doing anything other than that. So we took their breakdown, and then okay, so this is what they have, this is what they have regarding the provision, and this is how their provision looks like, and we just total it, and then we then compare it to the financial statements. In the second procedure, which is inquiry, inquire with the directors, and particularly the finance director we are talking about, or inspect relevant supporting documentation. Again, the source supporting documentation is actually the source document. For example, if they have received the litigation, then obviously that would be coming up from a supplier or a customer. Then we are either asking the directors, or we are looking at the supporting documentation to confirm that a present obligation exists at the year end. So you see where the present obligation means there's not a future payment, and they are already into the contract. There's a present obligation as a result of the past event, which is the criteria of the provision. And then we have the board minutes. Again, you see the importance of this procedure. Inspect the relevant board minutes to ascertain whether the payment is probable. This is this criteria. So if you have the accounting knowledge, because you are an auditor, your substantive procedures means you are checking those figures within the financial statement. So you need to know, first of all, the criteria to record the figures within the financial statement. If it's about provision, you know when the provision is recorded within the financial statement. And if you know that, then each criteria will have a separate procedure. You're confirming the present obligation exists. This is a procedure. You're confirming whether the outflow is probable. This is a procedure. You're confirming their reliable estimate, whether they have made a reliable estimate. This is a separate procedure. You're looking into the statement of profit or loss. This is a separate procedure. Looking into the statement of financial position, a separate procedure. You're checking the disclosure. This is a separate procedure. So then recalculate the provision. Again, we have now this recalculation. So we are done with the inquiries, we are done with the inspection, and then let's have the recalculation, which fits everywhere almost. Recalculate the provision and agree the components of the calculation to the supporting documentation. And now if the question is coming into your mind that, okay, at the last words of the procedure just confirms any particular assertion. Now, whether this thing is important for the exam, unless and until examiner asks you regarding the specific assertion, there's no need to write that this verifies completeness, this verifies accuracy, this verifies valuation. If you're writing it, you know it, it just creates a good impression. But it is not required, because as long as your procedure is complete, as long as your procedure is giving the full meaning, like here, recalculate the provision. Okay, so if you stop here, then the procedure would be incomplete. Why you are recalculating the provision? And then you continue it and agree the components of the calculation which you have done to the supporting documentation. Now, what is the supporting documentation? For example, if they've given the provisions about warranties, then the warranty is the supporting documentation. If it's about the litigation, then litigation is a supporting documentation. Like in the litigation, there would be the amount of damages being claimed. So you recalculate the provision and then you compare it with the damages which has been claimed. So if there's a material difference, then the provision is incorrect. And then inspect the post year-end bank statement. So you see the bank statement as a other document, corroborative record, to identify whether any payments have been made, and then compare the actual payments with the provision being recorded within the books. because if the payment is more than the figure which they have recorded within the books, then they have understated the expenses and the liabilities. Obtain the written representation, again, a very, very important figure when it comes to some calculations which are being made by the management, particularly in terms of the accounting estimates. You talk about the written representation. In terms of accounting estimates, where there are no absolute figures, like for example, absolute figures are, so when you issue the shares, so the figure is absolute, like you know the market value at that date. When there's a depreciation, the figure is absolute. There's no doubt regarding that. But in terms of the written representation, when you have the litigations, where you have the estimates, significant estimates being involved, then you take the written representation from the management. So obtain written representation from management that they believe that the provision is valued appropriately, that the assumption on which they have recorded the provision is correct. And then obtain the confirmation of from the company's lawyer. And you can also review the correspondence between the company and their lawyer to confirm the likely outcome and the chances of payment, whether the outflow is probable or possible. And again, the correspondence is received from the lawyer. And then one of the most important, easiest, and marks gaining procedure, which fits almost everywhere, is inspect the financial statement disclosure for the provision according to the relevant standard. There's no need to write the name and the number of the standard. So review the notes to the financial statement or inspect the financial statement disclosure whether they have been correctly provided as per the relevant standard. So you see that you just stick to the basics. Whenever the examiner is asking you regarding the substantive procedure, first of all, you should have the accounting treatment in your mind, because with every accounting treatment, you can write one procedure. Then you need to know the techniques, analytical procedure. Now here, why we cannot apply the analytical procedure? Because analytical procedure is all about comparisons. Now, every year the company does not have the provision, except for example, provision for warranties, because every year they offer the warranty. You can see the provision based on the sales every year. But litigation, for example, there's no litigation every year. So that is why the analytical procedure is not that much important over here. It can be relevant in terms of depreciation, where you're comparing this year depreciation charge with the previous year. Allowances, where you're comparing this year allowances with the previous year allowances. But not everywhere this is the relevant procedure. Inquiries is one of the most important procedure, because you ask the relevant person regarding that. Similarly, we have inspections of the documents and the recalculation. So three most important procedure within the AEIOU, which includes inquiries, inspection, and recalculation. And then the source document, accounting treatment, and the other records. That is something very important. Okay, now we have something specific, which is redundancy provision. Now, again, when you just see the redundancy provision, the accounting should come directly into your mind. Okay, redundancy is from the restructuring. When the entity is doing restructuring, then the company usually have the redundancies. And for restructuring, we know that there should be a formal plan of the company, and it should be communicated to all the stakeholders. This is the accounting treatment. So there should be a formal plan. Now, how the formal plan can be confirmed through the board minutes, how the announcement can be seen, that they have announced, they're communicated to the stakeholders by again asking the management to provide them the evidence of whether they have announced to the stakeholders anything which is they have given on the website, or email them, or called meeting, or then you can see the meeting minutes of those things. And okay, once it is established that they are going to make the employees redundant, then they have to make the redundancy payments. The redundancy payment is an expense, and as well as the liability that you're going to record the redundancy provision. And again, this redundancy provision is an accounting estimate. And you're going to record it when the outflow is probable, when there's a present obligation. Okay, how much they're going to pay. So you can see that thing within the board minutes, and you can see within the law that how much is the redundancy payments, or within their contracts, HR policy book. So discuss with the directors of Chuck Industries. Now, if in the exam, if it is a case study question, just write the name of the company. Otherwise, discuss with the directors. And if it's about specific company, just write the name of the company, as whether they have formally announced their intention to make the sales ledger department redundant or whatever, to confirm that a present obligation exists. So there should be a formal plan communicated to stakeholders. If announced, review supporting documentation to verify that a decision has been formally announced. So you see that first of all, if you know the criteria and you know the accounting, you can make the procedures easily. Then again, those similar techniques, the board minutes, to ascertain whether it is probable that redundancy payments will be made. Breakdown of those redundancy payments, because that includes many things. Recalculate the redundancy provision, again, the recalculation. Okay, and then written representation from the management, and again, the disclosure. So you see, the similar thing is coming over here. If this was a provision in general, and now if it's redundancy provision, and sometime it can be, for example, a warranty provision, whatever, the technique remains the same. There's no rocket science in making the procedures. Now, but how you can perform better in the exam? First of all, read my notes carefully. Read each and every procedure. Try to make sense of it. Why we are applying this procedure? What is the intention? What we are checking? Because it is not possible, at least for me, to cram each and every procedure. I can at least not do that. So I hope so that it is difficult for you as well. But if, for example, you can cram each and every procedure, then that means you're a genius guy and just need to relate it with the case study. Other than that, you just need to understand it so that you can write the same thing in your own words. Just try to make a sense of it. And then you can apply in an exam question. So it's not a rocket science. Just stick to the basics, stick to the technique, and then you can make it easily.